Tim, thanks very much for the opportunity to present today. I'll spend all of my time today talking about the Antler copper project located up in northern Arizona. New World acquired the Antler project in early 2020. We executed agreements in January last year and completed due diligence in March 2020. And we've have the right to acquire 100% interest in the Antler project. It's a historic producer. Last production from Antler was in 1970, and it was a very high grade mining operation back in the day. We see that the acquisition of Antler provides us an opportunity to bring a project into production very quickly for relatively low capex. And because of the very high grades here, we believe that we will have a very high margin production opportunity that should provide us extremely good exposure to the upturn in the commodity price cycle, particularly the high copper price environment that we have seen since the acquisition of Antler. And indeed, as a lot of the previous commentators today have commented, we anticipate that the high copper price environment will be here for the foreseeable future. And with that, we see that reaching production is going to be extremely valuable to us. Just next slide, just corporately, the company recently completed a $20 million capital raise. And so that puts us in a position where we've currently got net cash at bank of about 24 million, which sees us fully funded through exploration, permitting and feasibility studies with a view to applying for mining permits in the foreseeable future. With a market cap of about 133 million, then that gives us an enterprise value of about 110 million. Next slide, please. So the Antler project itself is located up in northern Arizona. We're about 2 hours from Las Vegas and about 3 hours from Phoenix by road. It is in extremely good jurisdiction. Arizona itself is the center of copper production that amounts to 70% of the US's annual production. So it is a very well-established copper mining jurisdiction. And where we are, we have multiple mines that are in operation and coming back into operation in close proximity to us. The Baghdad copper mine is about 100 kilometers to the southeast of us. That is the second largest copper project in Arizona. And then where we are, we're located about 20 kilometers from the town of Yucca. Through Yucca runs an interstate highway and transcontinental railroad. And then 20 kilometers to the north of that is the town of Kingman, where the population is about 35,000 people. So we have very good access to infrastructure and personnel, which is going to be extremely valuable as we bring Antler into production, because that will help us keep the capital costs down and also keep operating costs down. This district that we're in is well understood as being a home of a VMS deposits. Typically where there's one VMS, there's often more in a belt, and we see this as a district size play. But for now, we are focused on bringing Antler back into production. The reason we are doing this is because there are, from the work that was done in 1970 through to 1975, we know that there's considerable historic resources remaining unmined in the project. Historically, the deposit was mined, the top 150 metres of the deposit was mined by way of an inclined shaft, and around about 70,000 tonnes were mined at a grade of 3% copper and 6% zinc, which equates to about 5% copper equivalent. So that's very, very high grade. Most copper mines today, particularly the big porphyry coppers, mining ore that might be between 0.5 and 1% copper. So 5% copper equivalent is very, very high grade. Mining ceased in 1970 because the copper price had declined to 45 cents a pound. But between 1970 and 1975, further exploration was undertaken, and that culminated in the declaration of a resource in 1975 of 4.7 million tonnes at 2% copper and 4% zinc, which was around 3.5% copper equivalent. At the time, copper price continued to be 55 cents a pound, and so it was uneconomic to mine that. So next slide, please. If we just look at the work that was done previously. In pink, we're now looking in long section. In pink are the historic stopes, predominantly within 100 metres of surface, with the deepest historic stope in pink there being 150 metres below surface, which was the last phase of mining in 1970. And then subsequent to that, a series of holes were drilled from underground, being the blue dots. And then in 1975, a series of 9 holes were drilled from surface, which appear as white dots on this long section, that outline the 4.7 million tonnes of historic resources. Now, that was very wide-spaced drilling, but amongst that wide-spaced drilling, we saw that there was some thick, high-grade mineralisation immediately underneath the historic workings. And so we thought that there was a very good probability that with infill and extensional drilling, we could firstly confirm that historic resource and then subsequently expand on that historic resource. And with that in mind, we saw that if we could outline 3, 4, 5 million tonnes of high-grade mineralisation here, we would have a very viable mining operation. And these deposits can conceivably be 20, 30, 40 million tonnes. We saw earlier Trilogy have 40 million tonne VMS deposits up in Alaska. 150 kilometres to the east of us, the United Verde VMS deposit. They've mined 33 million tonnes of ore from there previously. So these deposits have the potential to be very, very big. But even 4, 5, 6 million tonnes up to 10 million tonnes can be a very viable operation here because of the very high grades. So we set about confirming that resource and then expanding that resource. Next slide, please. Initially, we drilled a phase of 6 shallow holes. We commenced drilling in March 2020, completed 6 shallow holes just to validate that the historic data was real. Very quickly, we confirmed that the historic data was very real, and indeed, the 6th hole that we drilled intersected 13 metres at 3.5% copper and 5% zinc, which at the time was the thickest zone of mineralisation ever intersected on the project. And that gave us a very good indicator that the previous operators didn't understand the mineralised system particularly well, because that mineralisation remains unmined, yet is only 110 metres below surface and only 20 metres from the shaft. But our objective was to delineate, to enhance our confidence in that 4.7 million tonnes. So we set about drilling deeper and deeper underneath the historic workings. If we could just go to the next slide, please. So over the course of the last 12 to 15 months, we've been drilling deeper and deeper underneath the historic workings. Initially, we progressively stepped down. If you look in detail at the numbers on these holes, that the number, so Ant 9 being one of the early holes chronologically, the holes pretty much follow the course of the exploration activity as we move deeper and deeper. But without exception, as we drilled underneath the historic workings, we consistently intersected extremely high grades of mineralisation. And in many cases, we were intersecting very substantial thicknesses of high-grade mineralisation, with some of the better intersects being in holes Ant 20 and Ant 21, where we're intersecting 23 metres at almost 7% copper equivalent and 23 metres at 4.5% copper equivalent. These are very, very substantial thicknesses, very mineable thicknesses of ore at extremely good grades. Next slide, please. So in this main chute underneath the historic workings, we continue to drill. We have 2 rigs continuing to operate, but to this point, we've extended mineralisation 465 metres down plunge from historic workings, with mineralisation appearing to get better with depth, and the consistency of the mineralisation being proven by our step-out drilling that has typically been 60 to 80 metres apart, with us consistently returning comparable results. So we really have a lot of confidence that the mineralisation underneath the historic workings is going to be readily mineable. In conjunction with that, if we could just go to the next slide, we saw that there was potential to find additional mineralisation along strike from the deposit. So concurrent with that deeper drilling underneath the main workings, then we did 3 forms of geophysical surveying. Initially, aeromagnetics that delineated a 1,000-metre long magnetic anomaly that coincides with the known mineralisation. We followed that up with a form of electrical geophysics called induced polarisation, or IP, that delineated a very nice, strong, chargeable target immediately south of the historic workings. And more recently, we've used another electrical geophysics technique called CSAMT that seems to indicate that the mineralisation may well extend further south than the IP target. But just once we'd completed that IP surveying in September, October 2020, we drilled our first series of holes to test that target. We just go to the next slide, please. Then to the south or to the right-hand side on the long section, then we see we've intersected a series of holes that we think has defined another shoot, what we're calling the south shoot, with again some very robust thicknesses of very, very high grade mineralisation, up to 22 metres, commonly 4, 5, 6, 7, 8% copper equivalent. So again, we're adding to the resource base because we're hitting thicker and thicker mineralisation, and the grade of the mineralisation continues to be very high, which reaffirms our confidence in the ability to mine this mineralisation. And by having this infill drilling, we're increasing our confidence in the resource base. So this south shoot, if we just go to the next slide, this south shoot now extends at least 300 metres from top to bottom, remains completely open at depth, and we continue to drill test the down dip extensions of this south shoot and the main shoot, because we see there's capacity to continue to add to the resource base by chasing this thick high grade mineralisation deeper and deeper. And just the next slide, please. So from here, our target continues to be to bring Antler back into production as quickly as possible. We see that there is a very good opportunity, because of the very high grades, to develop a reasonably modest size operation, but with the very high grades, it would be producing a significant quantity of copper metal, which should allow us to have a low capex, high margin operation. We're working towards declaring an inaugural JORC resource in the middle of this year, July, August this year, that will feed into conceptual mining studies and then mine permit applications, with a view to having mine permit approvals in mid-2023, which will lead into construction, with a view to being into production in 2024 to capitalise on the current copper price environment. Thanks, Tim.
Thanks, Mike. Several questions here. You talk about going into production in 2024, and you've got these very strong copper theme tailwinds. What are the risks to execution moving forward?
I guess the initial risks are technical risks. We have initially been addressing the technical risk being, have we got a mineable resource? I think the drilling that we've done over the last 15 months is certainly demonstrating the continuity in the grades, the continuity, in fact, it's not so much the continuity in the thicknesses, we've been intersecting thicker mineralisation than was previously understood. So certainly the technical merits from a resource perspective are certainly stacking up. Concurrent with that, we've had metallurgical test work that's ongoing. Historically, in 1970, there was a copper processing plant that had been built specifically to treat the Antler ore 20 kilometres away, and they achieved very good recoveries through that plant. So we don't believe that there's going to be metallurgical risk, but that is a risk that we continue to de-risk. And then I guess from there, it's permitting risk. And in this, I've operated in the US since 2005. This project is on privately owned land in a sparsely populated portion of northern Arizona. Out of all the projects that I've operated on, this will be the easiest project to obtain permits for. It is in a fantastic jurisdiction for permitting. So there's permitting risk, but we are working our way to essentially de-risk that by applying for permits and working with the regulators to have those permits approved.
And a question here, what are the threshold reserves required to obtain debt funding in the short term? Would you consider sale of your kind of precious metal streams to help fund that task?
Look, we think because of the potential high margins of this project, it will be very attractive to debt financiers. So we are certainly considering that once we have our mining studies well underway and we can sit down with debt providers, we will certainly be pursuing a component of debt funding. In terms of the size of the project, I don't think it comes down so much to the size of the project, but more to the margins. if this is a relatively low capex but a high margin project, then I think that will make it attractive to the debt financiers, and that's how we're viewing this. And the high margins are purely because of the exceptionally high grades that we're achieving, that we're consistently realising here. So yes, we will be pursuing a component of debt finance to develop this.
And finally, when do you start having those offtake discussions?
So all the commodities traders, well, I shouldn't say all, but many of them have already contacted me. We're not actively pursuing offtakes at present because that's a valuable commodity of the project. We have a bit of leverage. The longer we maintain the tradability of that commodity, then we will continue to talk to people who are expressing interest. But we certainly don't want to lock in any offtake anytime too soon.